Good morning, traders. It's Up Wall Street back with another morning report. Let's dig into it. All right, SPY, you could see bullish engulfing 65-minute candle here on the close. If we turn on after hours, a little bit of a dip here. We're down about a third of a percent. So what I'd be watching for today is a move below 533 to 530. And then anything hold over 533, we could see a move up to 537. All right, next up is QQQ. You could see we held pretty tight into a range yesterday, and now we're fading again into the morning session, down about 0.3%. Downside level to watch is 461 for a move to 457. Upside level to watch is 465 for a move up to 470. All right, here's IWM. Again, still acting weaker relative to SPY and the Qs. We are below $200 pre-market. So for an upside move, I'd watch for a move over 200 to 204. And if we fail to recapture 200, a downside move to 196. All right, here's GLD. Trying to find a bottom here. We did nail that downside level at 211 2 days ago and started to bounce. Now I want to see a move over 214 to see a move up to 216, or we could go back to 211 if we get rejected at 213. All right, here is SLV, very similar chart to GLD. This one gapping down this morning under the 50% Fibonacci retracement at 26.72. Watch for a move down to $26. All right, here's Bitcoin, another hard rejection at 70K. How many times is this going to get rejected at 70K before we see a deeper pullback? So that would be my only concern here. What I'd like to see today is a move back over 67.4 thousand. To see a move back up to 69.4 thousand. Otherwise, if we continue to fall, 65.3K is going to be our downside level. All right, so now for our daily watch list. These are some trade ideas for today. Let's take a look at some names first that we are already talking about. Here's GM. So GM had news this morning. Bear with me. So that they have announced a $6 billion share buyback program. They expect to exhaust the remaining $1.1 billion of the prior buyback authorization before the end of Q2. So this trade alert went out on Sunday. Yesterday we got the breakout through 46.02. This morning we are gapping up just about 1%. So it's not a fast mover, right? But it looks like we're on our way to $50. For me, that's where the trade is probably going to end. But congrats to everybody who caught this trade. All right, next up is Shop. So this one took a little while to get going. We kind of bought maybe a little too early, but you can see continued to hold 57.51. We had that MACD and Williams percent R divergence. Then we went into a TTM squeeze about 5 days ago. We consolidated for 2 more days. Yesterday we broke out over that 61.37 Fibonacci, and now we're headed towards 64.32. That for me is probably where the trade ends. That's a 618 retracement. That's probably going to be a tough level to break. We have run pretty hard in respect to Shopify as a stock. So just be wary of that. We also have our TTM squeeze looking to fire today. Generally speaking, once the squeeze is fired, the trade is almost over. Usually it's 6 to 8 candles of a squeeze fire, but we are already 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 days into this move off the bottom, right? So a pretty good move here on Shopify. Congrats if you held, but just make sure you're taking profit into these key levels. All right, here's 2 new ideas for today. I posted these in the chart room. First one's Airbnb. You can see we have a inverse head and shoulders here. We have our neckline. The breakout move would be up to 156.99. For an entry, I'd watch for an entry over 148. So over 148, I would keep your stops under 146 for a move up to 157. This one also has a TTM squeeze setting up. This one also has bullish divergence, very similar to what we saw on Shopify. And we also have the early signal, which is your MACD crossover. So this one looking pretty good today, or maybe even into the end of the week. But, we'll see. We'll talk about that in a minute. Here's the other name that I saw a very similar setup to. This is another inverse head and shoulders. And keep in mind, an inverse head and shoulders typically is a bullish reversal pattern. That means that in order for this to technically be a correct setup, you have to be in a downtrend, right? And then you make a left shoulder, you make a head, and you make a symmetrical right shoulder. So the right shoulder should be symmetrical to the left shoulder. This is like an A+ setup for the inverse head and shoulders. And my recommendation is you can go to Bulkowski, just look up Bulkowski chart patterns, and you can read through all of the statistics on these bullish and bearish reversal patterns, how often they work, measured move, all of that good stuff, right? All right, so talking about Cardinal Health, this is CAH. Again, has TTM squeeze, and it is a slingshot, meaning it's gone from negative territory to positive territory with rising momentum. We have bullish divergence on the Williams %R, and we have a bull flag in the right shoulder. So my only concern with this, like entry for me, would be over 99.83. You also have $100 right above, but my only concern would be on the 4-3 pivot anchored VWAP, right? So that I added a secondary line here to cover this wick. So, we could see a move up to 102.80, but just be wary of that might be the area where prices break even from anybody who bought up here. And so this is going to act as a bit of a supply zone. We're in a demand zone here, but when you see the gap between the demand and the supply zone, once price hits this, everybody that bought over here, their average price is here, their break-even price is here in supply. And so what may happen is, if they bought up here and they're holding down here, they're going to say, well, when I get back to break even, I'm going to sell a little bit, or I'm going to sell, maybe the rest of my position and move on to another trade, right? And so the issue with that is, you get into the entry here on the breakout, and then we run into supply and everybody sells into you, and then we come back down. And that's why a lot of the times you get these breakouts, the back test. And the back test is the most important thing, right? So maybe everybody that bought up here, that sold into the move up here, maybe they come back to the back test and they say, oh, well, we're coming into a demand zone. Let me buy back. And now you get the bounce, right? So this is one of my favorite setups. It's the breakout, the back test, and the bounce. I call it the BRB setup. Be right back. Bounce, retest, bounce. Or a breakout, retest, bounce. All right, so that's it for the morning report and for the daily watch list. Let me know if you have any questions down below. Moving forward, I'm just going to start combining these videos so that it's easier for you to just look at one video. My recommendation, hopefully you're watching this at 1.5. I don't talk too fast, but I don't talk too slow. I find that 1.25, 1.5 speed works pretty well for my videos. But yeah, that's what we got for today. Keep in mind, we have CPI tomorrow at 8:30 in the morning, Eastern Standard. We have FOMC rate decision at 2 o'clock with Powell speaking at 2:30. And then we have PPI on Thursday. So we have 3 binary events in 2 days. Again, for me, this is a risk-off week until these binary events play themselves out. The market reacts, and then we can just move on with the rest of our trading day, week, and month. All right. Take care, everybody. See you in the next video.